I'm Robert Cardoza, and you're watching On the Street. This is the intersection of business and politics. This is where we give you all the information necessary for you to make good, prudent business and personal decisions for yourself. This is my favorite area of the show. This is where we have emails where I get to actually answer the questions that you're proposing to me. You know, this is probably appropriate because we are now at the end of the second month of tax seasons, the end of February, and I've got questions about taxes, so I guess we ought to go ahead and answer those things. My first question comes from Ron Greenberg from Atlanta, Georgia, and Ron's asking, he says, I'm preparing my taxes, but you know, with all the controversy and all the issues going on, I don't know what I can and what I can't deduct, and so can you help me? Well, you know, Ron, yeah, I can help you. Here's the thing. I know that there's a lot of confusion with regard to the increase in taxes, the $400,000 and the $450,000 and all those limits that were going on. And the truth is that doesn't affect you for last year. That's a this year issue. So let's get rid of this year for a minute and let's talk about last year. That's what you're preparing for. Now, you're worried about itemized deductions, and they're pretty much all the same that they've always been. The truth is that if your medical expenses, not your insurance payouts, but what you actually come out of pocket, including your insurance premiums, your doctor's visits, your prescriptions, any home care necessary or critical care issues necessary, all of those things are deductible to you to the extent that they exceed 10% of your adjusted gross income. Now you can find that when you get to the bottom of that first page. That's your adjusted gross income. If your medical expenses exceeded 10% of that, you get to deduct as an additional expense that part that exceeds the 10%. So now let's move on along and let's get to more itemized deductions. You're still going to be able to get the itemized deduction for the mortgage interest you paid on your home. You're still going to get the property taxes that you paid on your home. You're going to get the vehicle registration fees that you paid on your car. Those things are all going to be deductible to you. Now, there are some areas, depending on who you are, if you've got more than 2 homes, you're going to have some limitations. If you've refinanced and gotten money out more than $100,000 from your original mortgage balance, that's going to affect you. But if that's not the case, you're still going to be able to get those mortgage deductions just the way you did before. Now, let's move on one step farther on that itemized deduction list, and that's your charitable contributions. And there's 2 segments there. One is cash contributions or checks, and the other is non-cash. So let's talk about cash contributions. That's your church. You wrote a check. You put cash in the basket. You did all those things. Just keep in mind that you need to have that documented. It's best that you're registered with your church and you document that, and you're able to deduct all of it. So basically, you have to have canceled checks. You need to have a letter from your church acknowledging the gift. Those are the things, if you get questioned, you're going to need in order to do it. Now, with regard to non-cash, you know, that's what you give to Goodwill and Salvation Army as clothes and small appliances and those kinds of things. Again, you're going to get a receipt. And it's best if you take pictures of those things to document them. That's going to help you as well. Now, the last area in the itemized deduction area that is really going to be meaningful to you would be non-reimbursed employee expenses. Now, those are going to be deductible to you to the extent that they exceed 2% of your adjusted gross income. Here's the deal. To take non-reimbursed employee expenses, whether it be mileage or a briefcase or computer or traveling, it has to be an expense that your employer would not have reimbursed you for had you put in for the reimbursement. There has to be a policy stating that. If you can't get those 2 things, don't bother taking it, because in an audit you're going to lose and you're going to get hurt. So that's not the route for you to go. You want to make sure that you do all of those things. And you know what? If you have legal expenses, you get to deduct those as well. But remember, they have to exceed 2% of your adjusted gross income. Now, my next email comes from Frank Wilson from Anaheim, California. He says, hey, I've heard a lot of issues about the taxes being delayed by the IRS. Can you help me understand this? Well, yeah, I sure can, Frank, very quickly. The IRS said they're not going to be able to process any tax returns until late February. That's where we are right now. So you don't have to worry about that if you haven't filed your taxes yet. The other issue is that you noted here that you don't know if you're going to be able to file on time. Well, that's an easy issue. You can always get an extension to file from the Internal Revenue Service. That extension to file gives you an additional 6 months. So you don't have to worry about the April 15th deadline. You're going to have 6 months beyond that. So it's October the 15th that you would have to file. Sometimes it's worthwhile to file that in any event because it's going to give you the time without the pressure to take care of that. Now remember, that extension is an extension to file, not an extension to pay if you owe. Now I want to remind you that On the Street is brought to you by Biz TV, TiVo, and Ustream TV. You're watching On the Street. This is the intersection of business and politics. Me? I'm Robert Cardoza.